Good morning and a warm welcome to the program. Mule Ariyo is my name. Nigeria's banking sector is once again at a defining crossroad. Nearly 2 decades after the landmark consolidation by the former Central Bank of Nigeria Governor Charles Soludo, the Central Bank of Nigeria has rolled out another sweeping recapitalization policy aimed at reshaping the industry. The last major reform in 2004 raised the minimum capital base from 2 billion naira to 25 billion naira. The result was dramatic. The number of banks shrank from 89 to 25 through mergers and acquisitions, while the industry's capital base surged from about 300 billion naira to over 1.6 trillion naira. The exercise created stronger, regionally competitive banks, but it also led to job losses, branch closures, and eventually exposed governance weaknesses and contributed to the 2009 banking crisis. Today, history appears to be knocking again. With the March 31st, 2026 deadline in view, commercial banks must now meet significantly higher capital threshold, which is 500 billion naira for international banks, 200 billion naira for national banks, and 50 billion naira for regional banks. At present, Nigeria has about 24 commercial banks alongside merchant and non-interest banks, bringing the total number of deposit money banks to roughly 29. On paper, the sector is relatively stable, but most Tier 1 banks maintained capital adequacy ratio about regulatory minimum. Non-performing loans are largely within the prudential benchmark and profitably has been buoyant by high interest margins and foreign exchange gains. But beneath the surface, pressure is building. Mid-tier and smaller banks may struggle to raise fresh capital at the scale now required. Stakeholders face possible dilution. Analysts are already projecting merger, acquisition, or even license downgrades before the deadline. So this morning we ask, is this recapitalization a strategic move to build stronger banks capable of financing a $1 trillion economy, or are we about to witness another wave of consolidation with fewer players controlling a larger share of Nigeria's financial system? This is our focus this morning on the program. My guest is already here. We'll take a break now. When we come back, we'll hit the ground running. Please stay with us. Welcome back. My guest is already here in the studio. Today we're taking a look at the recapitalization of Nigerian banks, and the deadline is March 31st this year. That's in a few days to this time, and I have with me in the studio to do justice to it. I have Biodun Oja, a financial expert. It's a pleasure to have you on the show today.
Thank you so much, Mr. Kule. It's a pleasure being here again. Good morning, viewers at home.
In 2004, there was recapitalization by commercial banks across the country. How would you describe the exercise? I'm also that in the next few days we'll also be experiencing recapitalization in most banks here in Nigeria.
Yeah, thank you. I would describe the 2004 exercise as an experiment. We have now learned from the justice experience then, and now we've learned to be very much adequately prepared for. So it's not going to be a shocking development. It's going to be a development that each and every player is well prepared for. Thank you.
Let's look at the state of the banks must recapitalize to the tune of 500 billion, 300 billion, and 50 billion naira.
Yes, I believe the banking system is well regulated, and so far so good. A lot of vast majority of the banks are ahead. They are playing by the rules. But the kind of economy we are looking towards is an economy that requires more robust funding, and CBN magnanimously decided that okay, let's have stronger banks. So that's what leads to this recapitalization drive, and I believe the banks have been given enough time, ample time to recapitalize. I think it's almost 2 years gap. So if you are given 2 years to prepare for something, I think you have enough time to prepare, enough time to take any of those decisions that will make you stronger. It's not necessary. If you cannot meet up with capital requirements, you can as well match.
We'll still come to the solution because I'm also looking at the possibility of some of the banks actually meeting up with the recapitalization. For international bank, the CBN is expecting that they should have 500 billion naira. The national banks 300 billion, or the regional bank should be 50 billion. Do you think this is they can also realize all of this within this period?
Yes,
March 31st.
Yes, yeah. I can tell you authoritatively that almost 23 out of the 33 banks have met up with their capital requirement. Mind you, each bank have a level of authorization. So mostly the FUGAS, the international met up and merge up with them. Another option that instead of losing your capital base, you can approach bigger banks who have met up to acquire you, or you can apply for a license downgrade. For instance, if you are an international bank and you don't meet up with the 500 billion, you can say okay, fine, I've met up with the 300 billion, then kindly allow me to operate at the national level. So the next thing is to do is to close all your international outlets and operate within. But if you are able to meet up,
it's in the first place that CBN is also asking for this recapitalization.
Yes, we are looking at a $1 trillion economy, and we need bigger banks, stronger, resilient banks to be able to withstand the pressure that may come in. We need more funding. We need banks that will be able to fund large capital projects, mega projects. As the economy is expanding, we need more source of funding for the requirements.
The banks that can actually inject money into the economy.
Yeah, exactly. Money supply is basically the duty of the banks, and then even mopping up of fund, supply of fund is the result of what banks do. So basically what the CBN want to achieve is stronger banks that will be able to withstand pressure, no banks that will die overnight. In those days, a bank, you can wake up and go to the bank and it will tell you that the bank is there. So we need more resilient banks, more banks that can withstand the pressure and be able to fund the $1 trillion economy we are looking towards.
In 2004, that exercise actually brought banks in Nigeria from 89 to 25. Yes. Are you not looking at that as also prepare for this recapitalization?
No, that's not going to happen because a large percentage of the banks have met up with the capital requirement. So we are not going to have one or two banks may go, but it's not going to be that large amount, a large number. Reducing something from over 80 to it's not going to happen. Now we have about 33 of them, each with different level of authorization. Some even have just regional non-interest banking. Some of them are required to raise just 10 billion naira. So like cutting your coat according to your size. So there's no cost for
that. No matter how we say, is it going to experience job losses?
There may not be job losses. Banks have this internal mechanism of reducing workforce at intervals. That's their own internal. But this massive fearful job losses is not going to happen.
So the CBN actually says that this reform is tied to Nigeria's ambition of becoming a $1 trillion economy. In practical terms, how does a bigger capital base translate to economic growth?
Thank you. This financial muscle, the more fund you have, the more what do we call it now, the more capitalization you have, the more ambitious you can be to be able to fund larger projects, expand your credit net. How much money you can spread into circulation is dependent on the capital base that you have. Are you getting me, sir? So that is what CBN is trying to achieve. Send credit facility to the growing economy, especially the MSMEs. Not all these mushroom banks, they don't have the capacity to play in that market. So it's a bigger bank in the sense that you don't charge too much interest. That these people are just coming up. You are less. You have achieved. You have gotten to the El Dorado. You are not that desperate to grow. So they need banks that are more stable, more. How do I put it now? A bank that is more resilient in their ability to fund the economy, so that we can achieve.
As an expert, would you also say that this decisionist policy will also bring down the interest rate?
Yes,
I'm also looking at SMEs and other corporate organizations. How would they, in the real sense of it, benefit from this recapitalization?
Yes, like I mentioned, bigger banks. Analyzing the system, you find out that the bigger banks, they charge less rate even now than the smaller banks that are very
less interest rate.
Yes, bigger banks charge less interest rate than small. Taking more risk and putting the burden on the desperate populace. Why the bigger bank plays cooler, plays smoother? Because to make profit, because they have enough customer base to spread their tentacles. At the end of the day, it's like selling 10 pieces of item and just want to use the items now, compared to somebody who can sell 1,000 pieces of item. That person that sells 1,000 pieces can decide to lower his price and still meet up. Compared to somebody who have access to just 10 customer base, and you want to make sure you rip them off. So at the end of the day, it's going to be more very beneficial to the teeming populace, because bigger banks will now be less desperate for profit, and they want to do what they want to ensure that their customers have the ability to repay back, rather than ripping them off.
So it does mean that stronger capital automatically mean more lending.
Yes, stronger capital, yes, more lending. We have more fun to play with this time around.
After the 2005 consolidation, governance issues later emerged, leading to 209 crises. What lessons must regulators and banks apply this time?
Yes, only they said
once beaten
twice try. Let me use Yoruba now. You've been forewarned. So the forewarned, to be forewarned is to be forearmed. Those lessons are there. The shockwave. Most of the industry players then they didn't believe that CBN can go ahead and withdraw their license. They would think that it's a child's play. But having learned from that, they are now more prepared for the new tax ahead, and a lot of the banks have met up the quota. Some of the banks that are not met up, they started merger talks. We are well informed that a lot of them are. a few of them that have not met up. They are now discussing with other banks for merging.
I would say that the regulation we have at the moment is strong enough to prevent reckless expansion once banks become larger.
Banks are not even going through reckless expansion anymore because of the advent of ICT. You can do a lot of banking work without visiting the banks. So banks are looking at acquiring more customer base using the influence of the power of ICT rather than spreading their tentacles or spreading their branches all over the place. You can be in Nigeria and be operating your bank account in the US and you will be fine. So gone are those days that banks want to cover the whole place by opening branches up and down. So before banks open branches now, they make sure that there is a compelling, or there are compelling reasons to be there physically. Most banks now are going digital. They are going digital.
If you were advising a mid-tier bank today, what strategy would you recommend?
Yes, I will recommend that banks you should not try to compete with the big banks. Just have your strategy in place to grow piecemeal by piecemeal. Don't be too aggressive. Have your strategy in place that this is my focus. Have your focus in place. Have your master plan that by so year I want to be here, by so year I want to be here, by so year. That is not too ambitious overburdening growth. Gradual growth should be their watchword. We have banks that are doing like that, not too ambitious. They started with modest ambition, and they've been growing gradually. Each year by year, you see your profitability, you see your customer base grow, you see your total asset grow. So that's my advice for mid-level banks. I mean, all these medium-sized banks that don't compete with people whose strategy you don't know. Develop your own strategy to grow gradually.
So ultimately, how beneficial will this be to ordinary customer?
Yes, we said that times and over that if you are accessing funds from a bank, you will have factored it into your cost. Are you getting me now? If I'm getting loan at so percent, I will know that percentage will be factored into my cost. So when I finish my product, I will put it on the customers, the consumers, the profit I make from the consumer that I use to service the loan.
And do we also have the purchasing power to actually meet that idea?
Yes, it's an all encompassing thing, because if the economy is being funded, consumers will have access to more liquidity. Then it will also have effect